Okay, now children, let's discuss this question number, illustration number 3. Ashok of Delhi started business on 1st April 2020. So he, with a machinery of rupees 4 lakh and furniture of rupees 1 lakh, he purchased this asset from Delhi. And paid check from his saving account. So he introduced capital rupees 1 lakh. So Ashok started business on 1st April with machinery 4 lakhs and furniture 1 lakh. So he purchased this asset from Delhi and paid check from his saving. That means this is his capital brought. Okay, so this is his capital. He introduced machinery and furniture from his saving account in the business. That means he is bringing this machinery 4 lakhs and 1 lakh furniture into the business, and he is also bringing cash rupees 1 lakh in the business. This is given here. He introduced cash 1 lakh rupees, and also of Delhi he is coming with the machinery 4 lakhs and furniture 1 lakh. So he is bringing 4 lakh machinery and 1 lakh rupees furniture in the business, and also he is bringing cash 1 lakh in the business. So what he is bringing in the business? What Ashok is the owner of the business. What Ashok is bringing in the business? He is bringing furniture, machinery 4 lakh and machinery 4 lakh and furniture 1 lakh. So he has purchased this from his private bank account, his saving account. But anyway, this machinery 4 lakh and 1 lakh furniture he is bringing in the business. He is introducing these two assets, machinery and furniture, in the business, as well as he is also bringing cash in the business. So whatever he is bringing in the business, that is his capital. So machinery is coming in the business, furniture is coming in the business, and cash is coming in the business. When you write the journal entry, what is coming in the business? Machinery account debit. Machinery account debited, and furniture account debited, cash account debited. Furniture is 4 lakh worth rupees furniture, and 1 lakh rupees of 4 lakh rupees machinery, 1 lakh rupees furniture, and 1 lakh rupees cash. So total is his capital. So his capital is 456 lakhs. So he's started business started or commenced with machinery, furniture, and cash. So cash introduced, machinery, furniture, and cash introduced in the business. So this is the journal entry, starting first journal entry of this question, illustration number 3. So I have sent you. So this is the journal entry. So first of all, before preparing the ledger, you should have the concept of the journal entry. So this is a compound journal entry. 3 accounts are debit and 1 account is credited. Machinery account is debited, furniture account is debited, cash account is debited to capital. Whatever he introduced in the business, that is called as a capital. Capital does not mean only cash. Capital means whatever is introduced in the business, that is capital. Whatever is introduced in the business, that is called capital. Here, Ashok has brought furniture, machinery, and cash in the business. So that total comprises his capital. 456 lakhs is his capital. So this is the first entry. Now let's see date 16. Goods returned to Naresh. Goods returned to Naresh. So Naresh is our supplier. We are returning the goods to Naresh. We have purchased the goods from Naresh. So before we have purchased the goods from Naresh, and fourth we have purchased the goods from Naresh. Now we are some of the whatever is the problem, due to some problem with the goods, we are returning the goods on 16th. So Naresh account to be debited and purchase return is to be credited. So when the goods is purchased from Naresh, here purchase account debited to Naresh account we have passed here. This is the entry on 4th. Before we have purchased the goods from Naresh, purchase account debited to Naresh account. When we are returned, we are purchased goods from Naresh. Now afterwards, when we are returning the goods to Naresh account debited to purchase return. So this is the first, when we purchase the goods, Naresh account is credited. Now when we are returning the goods to Naresh account debited to purchase return. This is the goods purchased from Naresh is returned. Okay, this is the entry for purchase return. The next one is now paid to Naresh by check. Naresh account debited to bank account. Naresh account is debited, bank account is credited. So Naresh account is debited, so Naresh is paid by check, so Naresh account is debited, bank account is credited. So withdrawn from bank here. So withdrawn from bank for personal use. So here personal use drawings account debited to bank. So if it's cash drawn to cash account, if it is withdrawn from bank, drawings account debited to bank account. Sometimes goods may be withdrawn from the business, so that time drawing account debited to purchase account. If goods is withdrawn, drawings account debited to purchase. If cash is withdrawn, drawings account debited to cash. If cash is withdrawn from bank, drawings account debited to bank account here. So but always when owner proprietor use any goods for his personal purpose, that is known as a drawing. Sometimes goods may be withdrawn by the proprietor for his personal purpose. Sometimes goods may be withdrawn by the owner proprietor for his personal purpose. That time drawings account debited to purchase account. Here cash is used from the business, withdrawn from business for his personal purpose. So drawing account debited to bank account. So this you have to remember carefully. Again here receive a check from here GAG here. Receive a check from GAG and deposit the same in the bank. So receive a check from GAG and deposit in the bank here. Bank account debited. Receive a check, bank account is debited, and GAG account is credited here. Bank account debited to GAG account. So salary paid means, as you know that salary paid, salary account debited to cash. Here salary paid, paid salary to staff, salary account debited to salary account debited. Salary account is expenses. Salary account debited to cash account. Bank interest received from bank is increasing, bank account debited to interest is income here. Interest is credited here because interest is the income. Bank is increasing. When you receive when bank is paying you interest, your bank account will be increased. Bank account is debited, bank will be high because bank is giving you interest. Bank account debited to interest account here. Bank account debited to interest. Interest is the income is credited. Interest is credited because interest is the income, and bank is increasing, so bank account debited to interest account. And last one is purchase stationery for cash. Purchase stationery, last one, purchase stationery for cash. So this is the last entry. So here stationery account debited to cash account. So this is the entry for the stationery account debited to cash. When stationery is the expenses, cash is going out, cash is credited, stationery is the expenses, stationery account is debited. So this is the journal entry. So that you have to note down your journal, all the journal entries in your copy also. Okay. Then after passing the journal entry only, you'll be able to write down in the ledger. Ledger posting will be done afterwards after passing the journal entry. Now children, after passing the journal entry, we have to, all of you know that you have to prepare the ledger after the passing the journal entries. So individual ledger accounts are open. Let's see how many ledgers we have to open now. How many ledgers? First, we have to prepare machinery account, one ledger, machinery account. Next is furniture account, another ledger. Next is capital account, cash account. We have to prepare another cash account. Capital account we have to prepare. From here only, machinery accounts one ledger, furniture account one ledger, cash account another ledger, capital account one separate ledger, purchase account one separate ledger. Cash is already, I've said already, cash is here. So cash for all cash transaction, all cash will go under cash account. Okay, all purchase will go under one purchase account. Purchase account is here, purchase ledger we have to open. Purchase account is already, I've said purchase account here. Now knowledge account is a new account we have not made here before, so knowledge account should be made separately. Now cash account already I said. Now sales account we have to make separate sales account we have to make. Bank account we have to make separate bank account individual. Cash, as I said, all cash will go to the cash transaction, cash ledger. So in machinery we have to make. Machinery is already here. So machinery is already here in the first one. So machinery, no need to make cash already I have said. Goel Brothers is the new account here, new ledger we have to make. Sales already I have said. Knowledge also I have already said. Purchase return account we have to make. Knowledge I have said. Bank account also I have said. Drawings account is a new account. So drawings account is new ledger you have to make. So bank account as I said, Goel Brother is also done here. Salary account is the new account. Salary account we have to make. Cash already said. Bank already said. Interest account we have to make. Interest account. Stationery account we have to make. Stationery separate ledger we have to make. So cash. So how many ledgers we have to make? Let's note down. Ledger. How many ledgers we have to make? Ledgers to prepare. How many ledgers to have to prepare? Number one, machinery account. Number two, we have to make furniture account. Number three, we have to make cash account. Number four, we have to make capital account also. Capital account here. Machinery, furniture, cash, capital. Purchase account here. Number five, we have to make purchase account. Number six, cash account we have already done. Purchase account is not done. Nourish account. Number six, we have to prepare nourish account. Number seven, we have to prepare cash done sales account. Sales account we have to make. Sales account. sales account. Then we have to make bank account. Bank account we have to make this one, bank account we have to make. Number 8 we have to make bank account we have to make. Then cash account is already done, sales done. So now next machinery, this machinery account we have to make. Number 9 we have to make machinery account. We have to make machinery account is already done, no need to make again and again, no need to make machinery account is already done. Cash is already done. Gag and brothers, Gag and we have to make Gag and Bros. Number 9. Number 10 we have to make sales already done, knowledge already done. Purchase return we have to make, purchase return account we have to make, purchase return account. Next one, knowledge account is already done, noted. Knowledge account is noted. Bank account is also noted. Drawings account is new account here. Drawings account we have not done here. Drawing. Number 11 is drawings account. We have to make. So first of all, make a note how many ledgers we have to make. Okay. Drawings account. Bank account is already done. Bank account is done here. Bank account is done here. Gag and Bros already done here. Number 9 ledger. Now salary account, debit salary account. Number 12 is salary account. Salary account. So this one we have not done salary here. Salary is not done. Salary account here. Cash is already done here. Cash is done here. Bank account is already done here. Bank account is done here. Interest account is new account. Number interest 13 is interest account we have to open. Interest account we have to open this interest account. Stationery account also we have not done before. Interest account we have to also make interest stationery account. Stationery account we have to make. And last one is cash already we have made here, cash. So total number of accounts we have to make 14 ledgers we have to make. Okay, these are the ledger. First of all, you have to note down separately how many ledgers you have to make. So it shouldn't be repeated. Machinery means only one machinery, there is no other machinery here. If there are a number of machinery in the journal entry also, we write only one machinery. We have to, all the machinery will be posted to ledger. All the furniture purchase will write in the ledger, one furniture account. All the cash, there are many cash transactions always large here. There are many cash transactions. See here, first cash account is debit, second cash account is credit, here fourth cash account is debited, again here cash account is credited. There are many cash transactions. Cash account is credited here, cash account is here, cash account is debit, credited here, cash. Here is cash account is credited. So there are a number of cash. All cash will go to the cash account. All cash will go to cash account. So capital only one, small capital account only one capital is there. So but there are how many purchases are there? You see purchase, first purchase is here, purchase account is debited, next again purchase account is debited. Okay, in this way how many purchases are there? 2 purchases are there. So both purchases will go to the purchase account. This knowledge account, sales separate, one ledger for individual. All knowledge will go to the knowledge account. All sales will go to sales account. All bank transaction will go to bank account. All Gag Bros transaction all will go to Gag Bros account. All purchase return will go to purchase account. All drawings will go to drawings account. All salary will go to salary account. Interest. So these are only one entry is there anyway. But if there is 2-3 entry also salary paid, all salary will go here. All interest received will go here. All stationery will go here. So this is how we write the ledger separate. We have to make the separate ledger. This is the list of the ledger which we have to make. Okay, these what I have made. This I have made the list of the ledger which we have to open now.